What up, YouTube? FDY, aka Crypto Funds, back with an emergency sort of video. Welcome to the channel. So, Bitcoin, man, we got that nice pop over the weekend. Now we're coming back down. We're coming back down to key levels that we need to hold, key levels that we've been holding since late last year, and key moving averages as well. So, without further ado, let's jump right into it and let's talk about it. Now, I'm on the daily time frame. I wanted to zoom out and really look and see what's actually going on in the charts, really see what's going on with the market. We do have this upper sloping trend line that was coming in ever since October of 2023, and then we bounced, and then we got another touch here at about in January, and then now we're finally coming back to retest this area. So we're not panicking yet. We also have the 200-day moving average coming in, this red line here, which will be upward coming in at about 59K. And then we also have our horizontal range low. So we have three areas of confluence, or three areas of support that's coming in right now. Is what we've been talking about ever since basically the beginning of June, when we started to make our way back down to the range low. We double topped up here, and then we started to make our way back down to the range low. So let's talk about scenarios. Scenario number one, which would be the most favorable, of course, to all of us, unless you're trying to buy Bitcoin lower, is us to hold this area here at about 59. Let's just say 58 to 59K, because we do have the 200-day coming up. We have the upper sloping trend line, and we have the horizontal. So what we don't want to do is start closing dailies below these lines. We don't want to start closing dailies below these lines, and we definitely don't want to close a weekly candle below. So Tuesday is usually a bearish day. We usually get a nice pump Monday, or the weekend going into Monday, and Tuesday is usually pretty bearish. So we're kind of pumping back up a little bit right now. We came all the way down to about 59.3. Right now we're sitting at 60K. So we're not going to start talking about these lower ranges too much yet until we start closing dailies below there, or unless we just get a massive flush out. And the first level that, of course, we're going to be looking at is this 52K area, this 52 to 52.5K area. We see that when we broke out of here, we had this move over in February. We just basically went straight up. So we'll be having a nice area right in this area here of just pure air, basically what I want to call it. So if we do break down just as fast as we went up, we'll probably come right back down. We see we didn't really build any structure within this space in between this red and this yellow line right here. Let me actually turn these moving averages off so we can get a little bit more clear visual. So yeah, the first area that I would look at is this yellow line here. Like I said, at about 52 to 53K, we'll just make it that area right there, 52 to 53K. And then we'll hopefully, if we don't, well, what I'm looking at right now, we got the S&P and the NASDAQ doing good. We got those at all-time highs. Stock market, like I said, is doing pretty good. So I don't expect us to just dump super hard. We're not getting really any bearish news coming in like that. We do have some selling coming in. We do have Germany selling, which may be causing a little bit of sell pressure. We do have Mt. Gox starting to sell, which may be starting a little bit of sell pressure. But for the most part, I don't understand, or I don't know any other catalyst that is happening that could cause like a major sell-off, barring like something in the stock market or barring something in the overall macro economy happening. So I'm hoping we hold this level here at about 58 to 60K. That'll be my base case scenario right now. We keep telling the community, the CFC, shout out to the CFC, man. We haven't been complaining. We haven't been panicking. We've been staying diligent and vigilant and sticking to our plan. And we've been diligent. We've been sticking to our plan, sticking to our strategy, and we're not really like right now. We don't really need all those indicators. We don't really need all those lines on the chart. We have a few lines that we need to look at, a few lines, a few areas that we need to keep heed pay attention to, and we just go from there. Really, like I said, we need to hold this 58, 59, 60K area. If we lose this, we're probably going to 52 fairly quick. And then if we stay here, then we just need to reclaim 64. That's baby steps. Baby steps in the crypto market right now. Baby steps for Bitcoin. So like I said, we do have some selling coming in from Germany. I think the US was selling some. They were sending some to Coinbase a couple of days ago. We do have Mt. Gox coming to distribute the Bitcoin that they've been holding for maybe 13, 14 years. And we do have some bullish catalysts too. We have the Ethereum ETF that should be happening, or should be just be right around the corner. We have many improvements in the space, many improvements in a lot of these coins. We do have the celebrity coins still popping up, celebrity people still, celebrity, if you want to use that word loosely, coming up, starting to, try to make coins and they're just basically going to be rogue pools. They're not going to be around that long. Just telling you, if you're going to play with them, get in, get out. So what I'm looking at right now is I am going to start looking for some small scalps. One of my favorite things to do is to buy dead cat bounces. I don't care if the market is bearish. It's not just going to go down in a straight line. We usually go down, nice little bounce, down, nice little bounce. You know what I mean? Or up. Retracement, up, retracement. So I like those retracements and I like those bounces. So that's what I'll be looking at right now. The market is going down, the market is bleeding. So I'll be looking at bounces. Which coins have performed the hardest? Which coins have performed the best? Once the Bitcoin or the market recovers, as short as that time may be, that's what I'll be looking for some short-term scalps. But like I said, just keep your eye out on those levels, that 59, 60K area, the 64K area, and below us, the 52K area. Those are just the three levels that we really need to hone in on right now. And other than that, sit back and let the market play out. If you are getting stressed out about it, take a little bit of time off, come back, do your work, do your research, do your due diligence, and then go from there. And we have a couple big announcements. We have a big partnership coming to the channel. I will be announcing it on my next video, and we will be doing a major collab with a couple major channels soon, so stay tuned. So this is FDY, aka Crypto Funds. Make sure to hit that like, make sure to hit that subscribe. Appreciate everybody who's been watching my videos, liking and sharing. Talk to you in a minute.